Joining me now to discuss the global housing market is Robert Ciemniak, founder and chief analyst at Real Estate Foresight. Thank you for joining me.
Thanks, Rachelle.
So how would you describe what's going on with the global housing market right now?
I think globally the story is quite clear and commonly understood. You have post-pandemic low interest rates, fiscal monetary stimulus, lots of liquidity. On the commodity side, you have some limits to supply. All these factors create this unprecedented conditions for the price growth. But like you said, just on your segment, it's not equally distributed. So I think there's quite a big contrast between what you see in the US, UK, or China, for example.
So then who are the financial winners and losers in this type of environment, especially given the industries most affected by this surge?
Well, I think obviously it should be quite attractive for all the developers, home builders, anybody exposed to the market. It may be harder for people who take the inflation on the cost side. Although, like I said, if you look at the other regions like China, you have very different dynamics. So you talk about US 14.6%, UK anywhere 9 to 13 depending on the index. But in China, you only see 3.5% to 5% annual growth, and a very different sort of situation. I think you also pointed out Spain and India from Knight Frank Index. So I think it varies quite significantly.
So then if we look at what was happening with the market beforehand then, how much is the pandemic a key driver for this activity versus other factors that were brewing?
Pandemic has had a big contribution in terms of the fiscal and monetary response to it, and how many things were put on hold, how it resulted in many places in accumulation of savings in a way, effectively. But I think if you look at before pandemic, this was already a theme about the cooling of the markets and discussions about the rising interest rates, removal of stimulus. So I think it just accelerated and pushed further certain trends we've seen before.
So then what kinds of homes are people most interested in, and what are the price points looking like?
So as you know, we focus in our analysis, we focus on China, right? So I wouldn't necessarily comment on the US, but on the China side, what we see is continued significant demand from upgraders. So we're talking less about speculation, less about first time, but more about upgrade demand. Structural changes like development of new city cluster areas like Greater Bay Area, and how different cities change in their nature. Those are the kind of demand drivers that we see today.
So how is that affecting new home buyers or potential home buyers?
For the potential home buyers, the common phenomenon is the sense of prices being out of reach. And that's a common issue, I think, across the globe.
And in terms of the trends that you're seeing, are people tending to leave the city centers, and where are they going if they are leaving the city?
The common thing, again, varies by geography, but there's been this trend towards suburban areas growing in popularity. Some people question whether this is the beginning of some more structural shift in terms of the preferred types of location. So that's probably one theme that it is quite clear.
So for the markets that are seeing hot competition, buyers are really going the extra mile to make sure that an offer is accepted. What sort of things are they doing, and what are the sort of long-term consequences? Again, varies by region. Some of the markets we are familiar with, the incentives can always vary from. Actually, in the hot markets, it's the other way around. What you see is that you might have even lottery situations, like in some places in China, where you have to be a lucky winner in order to qualify to buy, although at a contained price levels. So you see that on one hand. In the hot markets, you don't really need much incentives. It's more about competition between the buyers.
All right, well, thank you. Good to have you on. Robert Ciemniak, their founder and chief analyst at Real Estate Foresight. Thank you so much.